Welcome back to the Wearable Takeover podcast, the ultimate briefing for the founders, investors, and builders shaping the future of health tech, wellness, sports tech, and fashion tech. I'm your host and also the founder of Wearable Tech Ventures, Lakeisha Greenwade, also known as Coach L. Well, folks, we are just coming back onto the scene. Well, folks, that's your weekly recap for the final week of June, and as we move into a new month in July, the innovation is relentless and the capital is moving. So, if you are an investor, or if you're looking to partner with the ecosystem, or if you're a founder who is building the next breakthrough in tech, register to be a guest on the Wearable Takeover podcast. And then if you are someone that just wants to support our mission to diversify, fund, and accelerate the pipeline for non-traditional tech founders, head on over to wearabletechventures.org and make a donation to support our. And we had some hurdles to overcome, just coming back last week. And so thank you for your patience. But we picked an absolute blockbuster over time to return. So as we look at what happened during the last week of June, it is proving that the wearable market is undergoing an evolutionary leap. Right now, the total digital health venture capital volume is experiencing some serious late stage concentration. And you'll see this in a number of articles, but firms like Rock Health tracked over 4.8 billion with a B dollars deployed in opening quarters alone across nearly 400 distinct deals. And this was heavily dominated by 9-figure mega rounds from consumer hardware giants. But the real story isn't just about venture capital moving. It's about major federal funding openings, historic regulatory shifts, and heavy-duty industrial workforce integration. So today, we break down a landmark FDA decision for a consumer giant, a massive update in the smart ring wars, and how Uncle Sam is pouring billions, yes, I said billions, into non-dilutive funding for early-stage founders. So let's dive in. So let's start with the headline-grabbing news that completely shifted the regulatory landscape for consumer health tech this past week. On June 24th, the FDA officially issued a closeout letter, dropping its enforcement actions against Whoop regarding their blood pressure insights feature. Now, if you remember, the FDA originally flagged this last year, sparking a significant debate on whether overnight blood pressure tracking crossed into the line of medical device territory. But following Whoop making minor visual and labeling tweaks to align with the FDA's new low-risk general wellness guidance, the file is officially closed. Bull Ahmed, who is the Whoop CEO, called it a major development for the entire sector. And this is a victory for investors and founders alike. It proves that consumer wearables can deliver advanced, deep health metrics without getting permanently sidelined by regulatory red tape, as that's what they like to call it. So combining this with their Series G valuation earlier this spring, Whoop is effectively writing the blueprint on how to scale a health platform in 2026. And speaking of massive weeks, the smart ring wars just reached another level. On June the 29th, the first reviews officially dropped for the brand new Oura Ring 5, and it is a total generational leap. Oura managed to slash the device's volume by a staggering 40%, bringing it down to a featherlight 2 grams. Now, while rolling out their new health radar system for real-time blood pressure trends and activity metrics. So as Oura marches aggressively towards its anticipated IPO, who's investing? If you're not already in there, they are setting a near impossible bar for the rest of the consumer hardware market to clear. But the traction this week wasn't just limited to the consumer's wrist or to the finger. So let's pivot to enterprise and industrial wearables, which are quietly capturing major B2B market share. So on June 29th, Mission Control AI officially introduced Bob. Now, Bob is a puck sized vest is a mounted wearable designed to solve a multi-billion-dollar crisis, capturing the institutional knowledge of a rapidly retiring blue-collar workforce. So Bob actually clips directly onto a safety vest, and then it travels with industrial experts through their ships and captures audio, images, and precise spatial positions. It feeds that physical, real world data straight into an on premises agentic AI platform. And following a product reveal at Viva Tech, enterprise leaders in energy and advanced manufacturing spent this past week rushing to secure early pilot allocations. So, if you are an investor looking for high margin SaaS tied to uncopyable hardware, enterprise spatial wearables like this are an absolute goldmine. Now, let's talk about non dilutive capital, because if you're a founder right now, protecting your equity is everything. And we just saw some federal funding doors swing wide open. So, first up, the National Institutes of Health, also known as the NIH, officially opened their newly reauthorized parent SBIR and STTR grant cycles. So, if you're building a high impact biomedical or health tech hardware, this is your signal to move. The NIH is injecting over 1.4 billion into early stage life sciences this year, and the next major standard receipt deadline is locked in for September the 8th. They've even updated policies to let you use funds directly for cybersecurity and foreign risk screening. But if you want to see where the cutting edge of federal dollars is actually landing, look at ARPA-H. And so on June 23rd, ARPA-H announced their pioneering award teams for the MOCS program. And it's an absolute goldmine for wearable innovation. They just funded a series of breakthrough projects, including Team Omega and I think we say it Babby Smart or Baby Smart, who are building wearable multimodal platforms and smart belt sensors for real-time maternal health monitoring. Yeah, I think it was Baby Smart. Between these new awards and ARPA-H's ongoing Delphi program, which is actively pouring money into next gen chiplets to track hormones and immune markers, the government is making a loud and clear bet. The future of healthcare is continuous wearable monitoring. Yes. So if you aren't leveraging these grants to de risk your technology, you are leaving free capital on the table. So, with that federal momentum and market movement in mind, let's look at three macro trends driving the investment committee at Wearable Tech Ventures based on this week's data. So, trend number one, we're looking at the General Wellness Exemption Fast Track. And so, thanks to Whoop's big FDA win on June 24th, expect a wave of startups rolling out features like blood pressure and metabolic tracking under the FDA's wellness banner rather than waiting years for clinical 510K clearances. Trend number two, the government-backed lab to on the body. With ARPA-H and the NIH aggressively backing everything from smart belts to biochemistry chiplets, Uncle Sam is de-risking deep tech hardware so venture capital can scale it. Trend number three, agentic industrial tech. The next wave of enterprise AI isn't a chatbot on your desktop. It's a wearable sensor on a factory floor translating human movement into operational data. Our community initiatives. Check the links below to watch our video deep dives on YouTube or on a platform that hosts our podcast. Hit that subscribe button, and most importantly, drop a comment below. What are you betting on after this week's news? Are you chasing federal grants, or are you looking at the industrial wearable sector? I'm your host, Lakeisha Greenwade, also known as Coach L. Keep building, keep backing, and I'll see you next week on the Wearable Takeover. Have a wonderful holiday. Peace.